The content of this podcast is for informational purposes only. Statements made by hosts or guests reflect their own beliefs and opinions and is not investment advice. The hosts or guests may have personal investments in any assets being discussed.
Hey everyone, welcome to the DeFi Podcast. We're launching right into it. Introducing our first guest, Rhett Chip, whose name I used to mispronounce for the first 2 years of our relationship?
Something like that, but I don't judge. Most people mispronounce my name.
Am I doing better? I think I'm doing somewhat better.
Oh yeah. Yeah, you're spot on.
I've improved.
You're in the 1%.
My dominance over the English language is only getting better. Amazing. Also introducing Jared, who's going to be, warned us was going to be quiet today before the recording because he is not feeling well, but he's here with the amazing Google Pool sign behind him, our main sponsor for this little shindig that we do almost every week. How are you feeling otherwise, Jared?
I'm all right. Ready to dig into it.
Awesome. I'm your host for today because Bill is out enjoying his family, which is nice for him. But we miss him, and he'll probably be back next week and do a much better job than me. So we're going to do a quick episode this week. We're going to just tackle Avant. Avant had a big launch this week. We think this is a major new primitive for Avalanche for a number of reasons. I think sort of to sum up the main two reasons is number one, it can bring a lot of TVL to Avalanche, and number two, it can make DeFi on Avalanche work because it really will get a few verticals to become very healthy in terms of demand. Rhett and I sort of like started working on Avant about 6-7 months ago. We were first talking about doing a CDP on Avalanche, and that evolved into an Athena-like product, which I think is actually quite a bit more evolved at this point and is more like a V2 of Athena. I think it's a different product. I think Athena is great, but I think this is not a direct competitor. If anything, we're going to actually be using Athena as an underlying strategy within this product. But I'm starting to ramble, so maybe Rhett, do you want to say a few words about Avant and just take it wherever you want?
Of course, yeah. I think there's a few good ways to frame what Avant is. One is you could call it a market neutral yield bearing token like Athena, as you said, but with a couple of key differences. So Athena is the carry trade essentially entirely, and it does that carry trade mostly on centralized exchanges. So kind of brief explanation of the carry trade is you can hold, say, ETH in the liquid staking token form, get a little bit of yield on it, and then you net that exposure out with short perps positions. Perps are basically non-expiring futures contracts. And the way perps work is if most people are wanting to bet, in favor of an asset, then you get paid to bet against it and vice versa, because they need to kind of net out long and short interest. And so especially in bull markets, it can be a really profitable trade because, you get paid to hold a liquid staking token, and then you could get paid a lot to go short on the other side. In bear markets, it's actually surprisingly not terrible, but it's not nearly as profitable. So that's kind of what Athena does. The key differences between us and that is, one, we do the carry trade, but we do it all on chain. We think that the on-chain perps markets and other on-chain DeFi platforms are mature enough now to scale this sort of strategy. But secondly, our mandate is much broader. So we're able to take basically any market neutral position in DeFi. So that includes the carry trade. We can do the carry trade with different assets, but it also includes things like stablecoin liquidity providing or RWA sort of strategies, et cetera. And that allows us to adapt to market conditions. And so the best trade for the market condition is kind of where we park the assets. Now, we have a high diversification requirement for the portfolio managers that put on these trades for us. So we won't park 100% of the assets in any one given strategy. Right now, there's no more than 10% in any one given strategy, as an example. Another way to frame this is if you're a heavy on-chain user, say you showed up in DeFi summer 2020 and you've been yield farming from the very beginning, and say you've been yield farming stablecoins, you know how painful that can be. So you often will have to rotate your assets to chase yield. In the process, you're going to give up some of the yield and gas fees. The gas fee piece is less of an issue now, but there's some friction there. But just kind of staying on top of yields and moving where the yield moves and doing it in a way where you can avoid exploits can be really hard to do and really taxing. A lot of my friends who are longtime yield farmers are kind of ended up getting tapped out a few years in. They're like, I can't always be staying up to speed on this. And so another way to think of this is it's a way of democratizing on-chain yield, where we identify and track the best risk-adjusted yielding strategies. We rebalance into those. We risk manage through diversification. We also use on-chain monitoring tools and do a lot of due diligence on platforms and strategies we engage in. And so then the average user can just mint, stake, and chill, or mint, liquidity, provide, and chill. So I think for someone who's used a lot of on-chain DeFi, I think that's maybe the better framing here. We've had the strategy running since July, but we just barely officially soft launched the platform this week. It's in a very narrow early access kind of whitelisted launch, and that access will start expanding in the next several days, not weeks, and then it'll be kind of full open access in weeks, not months.
Okay, so I just want to back up a bit before we continue. For people who are completely brand new to DeFi, can you give me like the ELI 5, like explain it like I'm 5 version of what is market neutral, what is yield bearing, how is it stable, how do you perform these actions?
Great questions. So let's actually start with like what a stablecoin is. So stablecoins are one of the most adopted things in crypto, and they are tokens that track the value of another asset, and most stablecoins track the value of the dollar. So you have USDT, which is the biggest. If you buy one USDT, you kind of expect it to be $1 in a year from now. There are stablecoins to other assets, but that's mostly what we're talking about. Market neutral is just to say, if you're doing some kind of trade, a market neutral trade stays neutral to the dollar, but the trade is generating some kind of income. So neutral to the dollar plus some kind of revenue, and that's how the yield can be generated in these. So if you say this is like a yield bearing stable driven by market neutral strategies, what you're saying is you mint this token, and the goal is for that token to track relatively close to the dollar, and then also have yield on top. So the TradFi equivalent would be like a high yield bank account. Someone gets dollars, they park them in their bank, they get 3%. Your $100 will be 103 in a year. This is the crypto equivalent of that. You take some tokens, you park them in this. It ought to track relatively close to the dollar if we're performing our jobs correctly, plus some level of yield. Now, the difference between these market neutral kind of yield bearing stable like tokens like Athena and Avant is the way that interest is provided is different than a bank. A high yield bank account kind of lends out your money and does these activities, and then they pass on some of that interest to you. With Athena and others, there are different ways to generate dollar yield and then pass it on. And those different ways generally provide higher yields. So last week, Athena's yield was just under 30%, as an example. And Avant's was higher than that, compared to a high yield bank account. It's going to be like 5% is maybe the best I've ever seen. So there's a big difference there. The way that you participate in a program like this or a platform like this is you come bring USDC, which is a common stable coin. You bring that you get that USDC on Coinbase or Binance or whatever. You send it to your own wallet. And then you go connect to the Avant app, and then you convert the USDC into AVUSD. if you want to capture the yield being generated on these underlying strategies, you then take that AVUSD and you stake it, and then you participate in that yield generation. And then if you choose not to stake it and instead you go liquidity provide on a decentralized exchange or lend it on a decentralized lending application or use it in DeFi in some way, then you'll be rewarded in other ways. So when the governance token of Avant goes live, we will be distributing that over time to people who choose to not stake their AVUSD. So it's kind of you pick what type of reward you want. So that's kind of the very basics of how it works.
Well, can I just add, actually, I think there's two really interesting advantages of building it in a tokenized way. The first one is that this can also just become a means of exchange. So you have this sort of like dual purpose. You can use it to yield, or you can use it to just, use to trade, which is a nice property. But then there's decomposability of DeFi. So then this can just be built into all sorts of other products, which is really the beauty of what we are building here in this industry. So it's sort of like the perfect product, at least for me. If you're in a market where the action is up and it's a very bullish market, you're going to get paid on the carry trade. So something like Athena does well, but then you don't do well when the market is down. You don't do as well. Whereas AVUSD is going to keep you doing well in all market conditions. So you don't have to monitor the market. You don't have to rebalance. You have like a professional portfolio manager who's going to do it for you. And there's going to be an insurance fund. This is all going to be happening within a Fireblocks framework with oversight from Hypernative. Is it Hyper?
Yeah, no, it's monitored with Hypernative is what we have
correct.
it monitored with. Yeah,
we hustle in
and
a couple of times on who do you work with.
Yeah. There's a few really great tools there, and that's who we're currently using. So, and not just one portfolio manager. So Avant is not putting on these trades ourselves. We engage with, and we'll engage with a growing number of portfolio managers that have good on-chain yield generating track records. We'll diversify exposure by portfolio manager, and then we require our portfolio managers to diversify their exposure as well, and then carry out best-in-class risk mitigation strategies. And so you get this really kind of diversified exposure, and it's obviously not without risks, but we think that's a good way to approach this. And as JF mentioned, Athena has done this too. I think it's really great. We're building an insurance fund with the protocol revenues and with much of the yield from kind of the unclaimed yield for those who don't stake. That insurance fund is really important because in the event there is an exploit that we are exposed to, it's very important to make sure that we can maintain solvency for our users.
Yeah, so I think Athena is a comparable, but this is a different product than Athena. For me personally, it is a better product as an investor. I would prefer this product. I prefer the risk reward ratio, but also like just the simplicity of just getting into it, and then you don't have to do anything else. You have someone managing all for you. You're probably going to get better yields. You could see this as slightly more risky because there is a little bit more. It's a different risk structure, really. But there are going to be more operations that happen. I think what Athena's built is actually a great product. They've proved out that you can scale a cash and carry trade and turn that into a stable coin. To me, this is like the V2 version because you're going to get a more stable yield in different types of markets, number one. And number two, we're going to be fully on chain. So as much as possible, we're going to be actually encouraging DeFi as opposed to bringing everything to sexes, which I think is a decision that Athena had to make to be successful. But I think the V2 version of this product, or sort of like the evolution for a product that is similar but not the same, ideally would be fully on chain, which is what we're building here.
Yeah, I think Athena's choice made sense. It's highly scalable for one, being able to scale a carry trade with centralized exchanges. But we're kind of decentralization maxis and believe that DeFi is the path forward, and we want to be part of that, but also it's really important for us to help bring TVL to the best DeFi protocols. And so as Avant scales, we are helping DeFi scale as well. We also just think that it's become mature enough, DeFi has, that you can scale on-chain market neutral like much more than you could even a few years ago. So perp markets are growing quickly. They're much more efficient than they used to be. A lot more open interest, a lot more efficiency there. Lending markets have grown a lot. Liquid staking is much larger than it once was for many assets. Ethereum, Avalanche, Solana, and even Bitcoin is now scaling up a lot of kind of restaking based yield. So the scale there is much larger, and then we just want to pour fuel on that fire. We think that a really important value add here is that as we bring TVL to the best DeFi platforms, we help them succeed and we succeed along with them.
So the track record recently of the trading partners that we work with in a down market has been around 2 to 3x Athena's performance, and now that we're moving into an up market, we don't know exactly where that's going to end up. My gut feeling is that it's going to be like 1.5 times Athena because we can be more productive with the underlying assets. What do you think of what I just said, Rhett?
Yeah, that's been pretty consistent with the history so far. I'm kind of hesitant to give forward-looking guidance, generally speaking, but we think the strategy has a really solid track record thus far, both in excess performance, but also in good risk management. So we have not been caught in a big catastrophic risk event. There have been a lot of exploits in DeFi. Luckily, DeFi exploits are trending down pretty substantially, but it's still a risk there, and really important for the Avant portfolio managers to manage really well. We think that track record will kind of speak for itself as we go on. So far, I think the best we've done in a given week is about 3x Athena, and taking Athena as the benchmark, and then. I think last week it was about 1.5 times Athena. So
yeah,
and Athena's great. Yeah, and so are a lot of these other yield bearing stables. There's various approaches. There's SDAI, and there's SFRAX, and there's some others, and there's really great. There's some growing RWA stables that are great. But as far as like a yield profile, I haven't seen one that has. As nice of a yield profile as Avant so far.
Maybe we can put the following tweet up on the screen. I'll send it in our DMs after the show. But Cinderman had a tweet that said, Cinderman, my favorite DeFi analyst on Avalanche. Shout out to Cinderman. And the tweet reads, DeFi Renaissance is here. Time to earn some real yield instead of round tripping meme coins. And the funny part about it is that the real yield that is going to be here is going to actually kind of look like a rug because it's going to be very strong yield if the market keeps trending up. So sort of a perfect time to launch Avant. I'm pretty happy that this is the moment at which we get things going publicly.
Yeah, I think the meme coin rotation's potentially looking interesting because I think for a few years with the egregious behavior of the SEC, a lot of people felt like the only thing they can legally do is launch a meme coin. But kind of the general perception now is that DeFi is finally going to be legal. It's looking like we'll have a more friendly administration, more friendly SEC, a more rational SEC, and a lot of the projects that have been sued by the SEC are winning their suits, and so I think that could really pour fuel on the DeFi fire because you could argue that a DeFi governance token is as good as a meme coin, but also has utility, assuming it's memeable. Whereas meme coins, it's just the memeability, and I'm not against those necessarily. But I think yield's going to be better, DeFi's going to be better. I think we're already seeing some of that.
So I think this is a good resume of the product, of the purpose of the product. Could we quickly move to what's next for Avant, and then I think we will in future episodes dive deeper into like different parts of all of these different topics, the trading, the products, the partnerships. But in the next couple of months, what do you see as the big coming pillars of what's coming, of what's happening?
Yeah, so coming very soon, we'll be expanding the kind of early access whitelist. So additional people will be able to come and mint and stake or liquidity provide the AVUSD. That's like a big thing. And anyone who's listening to this who wants to participate in the whitelist, reach out to us, and we'd love to consider adding you to that early access list. So that's next. A couple of other things is Avant will be omni-chain relatively soon, so you'll be able to hold and use it and stake it on your favorite chain, the chain of your choice. We think it's important for this to exist in all parts of DeFi. Governance token coming relatively soon after that. We think that it makes sense to not delay that too far. And then next after the governance token is we'll be launching additional AV assets. So say you're a person who holds ETH or Bitcoin or AVAX or SOL as examples, and you just want to park that in a productive place that's going to give you good risk-adjusted yield. Our goal is to not just bring you the best risk-adjusted yielding, stable-like token, but also the best risk-adjusted yielding Bitcoin denominated token or ETH denominated token or AVAX denominated token. And so it's a very similar thing there. Hey, I'm sitting on this major blue chip token and I want to get 5 or 6 or 7 or 10% out of it. We're not making specific yield promises, of course, but our goal is to allow you to just mint and hang out and not have to worry about where to move those assets. So that's kind of the next year's worth of roadmap for us.
Yeah. And just as a reminder, Avant is launching on Avalanche. It will bring fresh new TVL to Avalanche. It will create demand for stable coins, for liquid staking tokens, for borrow lend markets, and for perp markets. So it is set to make all parts of the DeFi ecosystem on Avalanche work much better. So I think it could be really like a catalyst for this DeFi renaissance that some people have been talking about. DeFi has been a little stale on Avalanche for the last, I would say, year and a half, 2 years. But this could be the moment with other entrants as well. So exciting times. All right. Thanks everyone for joining us on this short episode on Avant. We'll do more digging into Avant in the future as well as everything else in DeFi. We'll see you next week. Have a fun Thanksgiving. Bye-bye.
Happy Thanksgiving.
Bye.